Right, welcome back, grade 12s. I hope you had a good break and make sure you stretched well and that you are now ready to continue. We're still busy talking about the public sector and we're busy with the 8 and 10 markers within this section. 3.6. Why are state-owned enterprises, also known as SOEs, seen as a problem in public sector provisioning? Now, I'm sure you've all been watching the news and you've seen all the fallouts when it comes to your SOEs or our public businesses such as SAA, Eskom, all of those examples, right? And the big thing here is that people are seeing these businesses as just draining public funds, right? Because they're constantly in need of bailouts. They do not run according to normal private businesses, so they're not really concerned about profits and losses. They do not operate according to the profit motives, and they constantly need to be bailed out. And that is why they are seen as a drain on public funds, and people see this as just a total waste of money on part of government, and they would rather see that these businesses become privatized or being closed down. Okay, so why is it that it's a problem with public sector provisioning? You've got to understand that the cost of maintaining a plant such as Eskom's, it is very, very high, right? And they can't see, you can't see a turnaround in your investment. It takes a long time before you make a profit out of this kind of enterprise. So therefore, you won't find private individuals ready to take this on anyway. And it is a necessity, it is something that is needed. So unfortunately, government has to make sure that they supply this particular product. Right, so with all of that said, if we look at the memo answer here, they say the costs of maintaining and managing SOEs are very high. These costs result in higher taxes and larger public debt. As I said, many times they need large bailouts, and that money comes from government. And what government does in order to get the money is obviously getting more taxes from people, right? Private enterprises are more cost efficient than public enterprises. Meaning that with your private enterprises, they are more concerned about what are this expenditure that they take into account. That is what we mean by them being more cost efficient, okay? SOEs are seen as bureaucratic, inefficient, and unresponsive to consumer needs, meaning that they don't always supply that which consumers are demanding. SOEs do not operate according to the profit motive. They sometimes incur large losses, which must be funded by tax money, right? Not sometimes, most of the time, they incur large losses. SOEs are seen as the exact cause of huge unemployment and a shortage of funds for other developments. So what they are saying here is because SOEs are needing such a large amount of government funding, that takes away money which could be used for other projects, which could be used to create employment instead. Okay, once again, this is an open-ended question, an open answer. You do not have to give these exact answers. It's entirely up to what has your experience been. Okay, what do you remember seeing on the news or reading in a newspaper article that you can use within this answer? Right, 3.7. Evaluate taxation as part of the government strategy to grow the economy, right? So what they're saying is, how does government use taxes in order to grow the economy? Now, in order to answer this question, I need to understand, first of all, what does it mean when they say to grow the economy? What is meant by that point there? So what they are looking at, how does government use taxation in order to achieve economic growth? Now, if you remember, what is economic growth? Economic growth deals with the production of goods and services. So now I go back to my question and I say, okay, so they're looking at how is government using taxation in order to achieve economic growth, or in other words, what are they doing, how they're using taxation to increase production, because it is the increase in production of goods and services that leads to growth, right? And one of the things we see that government is doing is obviously, they provide tax incentives to export-driven producers. So we see that when people are involved in the production of goods and services for the export market, there are certain tax incentives available to them, right? They're also increasing the number of zero-rated products to enhance increased consumption. If you just go back to the question, 2 questions before this, where it speaks about 3.3, they talk about 19 basic food items are excluded from VAT. So that is what they're referring to here in this question. Okay, in 3.7, they speak about increasing the number of zero-rated products, right? So obviously, by not charging VAT on certain products, it increases the consumption of those products, keeping company tax or corporate tax at a lower level, reducing the import duties on capital goods, right? So remember, when you buy goods from outside, there is an import duty which is attached to that. So by reducing that import duty on capital goods, remember your capital goods is the machinery that businesses use. So obviously, if they don't have to pay so much for that machinery, so then they will then, so because it's not costing them that much to produce the product, they can then charge lower prices. So therefore, that doesn't impact negatively on domestic prices, okay? Impacting negatively meaning that the prices for the goods in South Africa is higher because they're having to pay so much money for the machinery that they are getting from outside. So by reducing that import duties that companies have to pay, it reduces the cost of production, which means they can sell to the consumer at lower prices. Right, but at the same time, taxation can sometimes hamper the economic activities, right? So like we said earlier on, an increase in VAT, for example, right? So obviously, by increasing the VAT, people have less money to spend. So that is a negative impact on production because now people aren't buying as much, so therefore the consumption of the good decreases, so the production would then have to match that consumption, which will also lead to a decrease in the production of that particular goods and service, which is then now not going to grow the economy, right? Individual personal income tax, that will discourage workers in higher income groups to work extended hours. So when they increase that individual taxes, people are not going to be willing to work longer hours because they're just paying more. Let me just put the word increasing in there. Right, so that's going to cause that people are not willing to work longer hours because more of the earnings are going towards taxation. And we just looked at the Laffer curve and we saw there that when people are having to pay more, then they won't work that extra hours. So government loses out then, actually. Fewer levies that eventually will lead to higher production costs have a negative effect on the aggregate demand of economic goods and services. So what happens is when the fuel levies go up, the input cost to production increases. So obviously then, because of that higher production cost, they're going to charge higher for their goods and services. So therefore, there's not going to be such a high demand anymore. So that is also negatively affected by that increase. Right. So once again here, it didn't tell you whether you must look at the positives or the negatives. So here they've given you a positive answer as well as a negative answer. And even if you had to give 2 positives and 2 negatives, you would still get your 8 marks, right? Because it doesn't say very clearly here, evaluate the best way in which government is using taxation to grow the economy. Then you only have to speak about the positives. Or if it said, show how taxation has, the taxation of government has led to a decrease in the economy, then you're speaking about the negatives only. Okay. Right, 3.8. Suggest solutions on how efficiency of state-owned enterprises can be improved for 10 marks. Please note, this is once again a question that's attached to an essay, but remember, at the same time, it could have been attached to an essay at one point, but it can then become an 8-marker later on again. Okay, and this is once again your open-ended question, so it's not an answer that you're going to find in a textbook or in the notes. This is once again your own experiences or your own things you've experienced. Okay, so we spoke about how draining SOEs can be on government funds and all of that. So now they're saying to you, how can give ideas of how they can improve the efficiency of these businesses. Okay, so the first part there, they talk about have proper and clear guidelines to fight corruption. Yes, because lots of times the problems within our SOEs is as a result of corruption. Second point there, they talk about forming private-public partnership to enable a faster, more efficient delivery of goods and services. Now, when you think of private-public partnerships, where you can get some private individuals involved in these businesses or private funding for certain aspects within your SOE. Setting clear costing and development mandates with financial implications clearly set out as what they do within the private industry, right? So they're saying use some of the private industry's guidelines to run the SOEs, right? Developing a framework for the appointment and remuneration of members to the board of state-owned companies and ensuring efficient management. If you remember, any business that is not making money, most of the time it's about the management not being efficient. Okay. Right, 3.9, once again a 10 marker. Why is price stability important in preventing extreme fluctuations in business cycles? Right, so when you think of the term price stability now again, the term price stability, if you think of that, it's talking about obviously looking at not having inflation, right? Or controlled inflation at least, okay? So that's what we mean by price stability. But also price stability is one of the macroeconomic objectives of the public. You must remember, one of the essay questions with the public sector is discuss the 5 macroeconomic objectives of the state, of which price stability is one of those objectives. So always bear in mind, if it's not asked as an essay question, any of the objectives can be asked as an 8 marker. And in this case now, we see it comes in as a 10 marker, okay? But it is not, this question is not asking you to discuss price stability as a macroeconomic objectives. It is asking you, why is it important to prevent extreme fluctuations, right? Right, so let's have a look at the answer here. Price stability is important in preventing extreme fluctuations in business cycle because it, number 1, contributes to high levels of economic activity and employment. Right, you must remember your price levels plays a very important role, because when prices are too high, we're not going to see much people buying. We're just going to lead to a decrease in in production, which is obviously going to affect employment, right? Improves the transparency of the price mechanism so that people can recognize changes in the relative prices without being confused by changes in the overall prices, meaning allow people to understand how your prices are set so that they can already see what is happening and they can already make their choices based on looking at how things are going in the market, to determine what they think is going to happen in terms of prices. Because with all of this, it allows people to make well-informed consumption decisions. When people are clear as to how prices are formed and the kinds of things that influence the prices of goods and services, it helps them to make better decisions when going out to buy goods and services. It will also encourage foreign investment, and foreign investment will promote growth, because the more investment you get, the more businesses are able to increase their production levels, which will lead to growth, right? It helps to allocate the resources more efficiently, avoids unproductive activities that are sometimes used to protect one against the impact of high inflation, avoids the risk of deflation, which makes it more difficult to implement policies guarding against it, implements inflation targeting by reducing distortion of inflation or deflation, which exacerbate the distortionary impact on the economic behavior of tax and social security. Okay. Prevents an arbitrary redistribution of wealth and income as a result of unexpected fluctuations, keeps interest rates unchanged to ensure continued growth in the economy without big fluctuations, and adapts the cash reserve requirements, which will compel banks to limit credit or money in circulation. So if you see there, here at the bottom end, they start now referring to the various instruments of the monetary policy. Because if you bear in mind, it is the monetary policy which is used for inflation targeting. Remember, SARB had set its inflation target between 3 and 6%, so therefore it is their responsibility to ensure that price stability occurs. And what they are saying here is that by keeping the interest rates unchanged, by adapting the cash reserve requirements, these are the kinds of things that will then ensure that there is continued growth, because people can now see, right, we understand where we're heading, and they can make better decisions. Okay. Right, 3.10. How successful is the government in reaching its macroeconomic objectives? Once again, we just spoke about the macroeconomic objectives just before this. I just briefly mentioned them to you. Now, the question here is again, how successful is the government? It's not saying you just need to speak about the successes, because in some cases, they've been very successful. In others, they have not been that successful. And let's just look at the one objective we just looked at is price stability, which is about the story behind inflation. And yes, we've been seeing that they've been very successful in keeping inflation in the 3 to 6% target. Right? We've never really been outside the 6%, and if it has happened, very quickly they managed to bring it back again. But at the same time, they sort of predicted growth to happen at a certain rate, and that they haven't been able to maintain that at all. Okay, so we look at the things that they have been successful at. Okay, so the government is successful in reaching these goals by, number one, reducing unemployment through the EPWP, right? EPWP, Expanded Public Works Program. This is something you were introduced to in grade 11 in term 3. We did quite a bit of things around the EPWP. So, reducing unemployment through that. We spoke about the managing of the inflation, improving economic equity, and obviously using BBBEE and your gender equity policies, and operating on a free-floating exchange rate system in line with international benchmarks. So these are the ways in which they've been successful, right? This is where they have not been successful. A decreasing economic growth rate. In the last 5 years, the average real gross domestic product growth has been below 2%, right? Increasing unemployment rates, we haven't seen anything with this. It's only been going up and up and up. And then there they give you some statistics, okay? Please remember, it's very difficult to always remember statistics, so you don't have to quote statistics, okay, because they change all the time. Fluctuating value of the rand, we've seen that happening so often. And then BEE only befitting a few individuals due to corruption and misrepresentation, such as fronting. Okay, what do we mean by the term fronting? Sorry. Fronting is where what some companies have done is that they've used of their workers and put their names on their letterheads and entered them as directors, which it wasn't really. The guy was just the cleaner in the business, but his name appears on the business letterhead as one of the directors, showing to others that they are complying with triple BEE. Okay, so that is what is meant by the term fronting, for those of you who were not sure there. Right, we come to the next topic. Please remember, before we move on to the next topic, your essay questions or your section C type questions here is obviously to do with public sector, is your macroeconomic objectives and the problems of public sector provisioning, right? Those are the only two essays there. The next section, which deals with topic 4, is international trade. There are no essay questions from this section. So these are only section B type questions, and section A, nothing for section C. Let's look at the section A type questions first. Right, 4.1.1. The comparison of a country's export prices with import prices by means of indexes is referred to as. Now already I know when I'm dealing with export and imports, then I'm dealing with trade, right? So obviously, if I'm comparing my exports with imports, I'm now dealing with trade, and the two trades that I've got in B, they talk about condition of trade, and in C, they talk about terms of trade. So it is somewhere between these two, and this got nothing to do with the conditions because I am comparing things. So therefore, my answer here I know would be C, which is the terms of trade. Now, 4.1.2, comparative cost advantage shows that world output can increase if countries in what they do best. Okay, so what they're saying is here, you can have comparative advantage. In other words, you can, when it's comparative advantage, it means somebody else can also produce what you are producing, but if you can produce at the lowest possible cost, then obviously you'll have an advantage over others. So the best thing here that can happen is if I am allowed to specialize in that particular field, right? So comparative cost advantage shows that world output can increase if countries specialize in what they do best, which would be point C. And that's the whole idea behind globalization, is so that countries are able to specialize in order to get the best. Right, refer to the graph below, then answer the questions that follow. Once again, you look at what is this graph showing me so that I can understand what the questioning is going to be. Here we're looking at exchange rates, and we're looking at how the rand has changed in the rand-dollar exchange. That is what we're looking at within this graph, right? Pardon. And we see there that there's been an increase in the demand for dollars. So therefore, that shift from D to D1 has increased the the price of dollars from 13 Rand to 14 Rand. Okay, right. So, identify the exchange rate system in the graph above. Obviously, we're talking about demand and supply, so that's free floating. What was the original Rand-dollar exchange rate before the demand for the dollar increased? I just said now, it increased from 13 to 14, so your original rate was 13 Rand per dollar prior to the increase in demand. Briefly describe the term exchange rate. So basically what exchange rates are, it just expresses one country's currency in terms of another country's currency. Okay. How has the increased demand for US dollars affected the value of the Rand? We see here that it used to be 13 Rand to a dollar. It is now 14 Rand to the dollar. So what that means is the value of the question says, how has it affected the value of the Rand? So now we see that the value of the Rand has depreciated. We see a decrease in the value of the Rand because you are having to pay more Rands in order to get a dollar, right? Here they say the value of the Rand depreciated or depreciated by 1 Rand, or you can also say the Rand has weakened. What could the South African Reserve Bank do to strengthen the value of the Rand against the dollar? Right. So one of the things they could do is that they could now flood the market with dollars. And many times when students say, but now how do you just flood the market? So what happens is instead of paying for debt or paying for goods and services in terms of rands, you pay for it with dollars. So thereby you are creating an oversupply of dollars on the market now. So obviously with more dollars on the market, as you know, with everything, when the supply increases, the price of that particular thing decreases. So the same thing here. So when there's an oversupply of dollars, you will see a shift in the supply curve, which is then going to decrease the price of the dollar eventually. Okay. Right. Okay, that's one way in which they can do it, selling US dollars, or also selling gold reserve on the international market. Okay, 4.3, we're coming to the longer paragraph type questions now again. 4.3 says, briefly discuss income levels and preferences and tastes as demand reasons for international trade, right? So, once again, we're looking at income levels, preference, and tastes. Okay, so if you think of income levels, okay, so when consumers earn more money, they've got more money to spend, okay? So when their income levels increase, there will be an increase in the demand for goods and services. But at the same time, when their income levels decrease, there'll be a decrease in the demand for goods and services. Okay. So what happens is that they can either increase or decrease, right? So here we see changes in income cause a change in the demand for goods and services. Consumable income, for example, may increase due to a decrease in tax or increased employment of factors of production, which may lead to increased consumption expenditure, right? So when people have more money, they are willing to spend, so therefore increase in demand for goods and services, and so therefore when there's an increase in the demand for goods and services, there's an increase in the production, or in this case now we're talking about international trade, so a greater variety of goods need to be imported from abroad, right? So the main thing with income levels is increased income levels leads to increased demand for goods and services, whereas the decrease is obviously the opposite, right? The next one there, they talk about income levels, preference and taste. So obviously, what happens is that when people leave their home country and they go and settle in another country, they sometimes long for goods from their home countries. For example, South Africans are always looking for their biltong, knickknacks, stony ginger beer. Those are not things you're going to get in foreign markets. So what happens is, in order to get those things, those countries will have to now import those things from South Africa. So can you see how this impacts your international trade, right? Because when people move countries, they want their home countries, and so therefore those things will then have to be imported from the home country into their new country that they have settled into. Right. 4.4, with the aid of a graph, explain the impact of an increase in mass production on international trade. Now, there's two ways in this question. They could have just said, explain the impact, okay? That's one way of asking a question. But when it says, with the aid of a graph, that means you have to draw the graph. If it didn't say with the aid of a graph, you didn't have to include the graph, okay? So they're talking about an increase in mass production. So obviously, when you're talking about production, you're talking about supply. So let's first look at our graph here, and we see what is happening. We see there that at the original equilibrium point, right? Point of equilibrium where demand and supply meets, at the original equilibrium, it is 16 Rand to the dollar, right? Then we see that there is the supply increases from S to S1. So therefore, the equilibrium shifts from E to E1 with the result that there is a decrease in the cost. It's now 14 Rand to the dollar, right? So what do we see then? An increase in mass production leads to an increased supply. So therefore, your curve shifts from S to S1. Now, exactly what you're seeing here is what you would write as your answer, as your explanation. Okay, so that's the impact that it's going to have, right? So there's going to be a shift from S to S1, right? So with the result, there's a decrease from, the equilibrium point moves from E to E1, and your exchange rate goes from 16 to 14 Rand. Okay, so instead of paying 16 Rand to the dollar, you're now going to pay 14 Rand. So what does that mean? When your dollar price moves from the higher position to the lower position, what has happened now? The Rand has now appreciated because you're paying 2 Rand per dollar less than before. And that's all you need to do for your discussion on what would the effect be, or the impact of an increase of international trade. You draw the graph and you explain exactly what's happening on this graph. There's no need to say anything else, right? This part here explains without any reference to the graph, right? It says create more employment that would lead to an increased demand for foreign goods that might facilitate trade and lead to an... You see, this is not looking at the graph at all, okay? But the question says with the aid of a graph, okay? So 2 ways to answer this: draw the graph and discuss the graph, or give a drawing of the graph and just give an explanation. In my opinion, grade 12s, it is always better to draw the graph and explain exactly what is happening on the graph, because then it shows you have an understanding of that graph that you have drawn. Okay, it's not just something you've learned off by heart and now you're putting it there. You actually understand exactly what's happening on this graph. Right. 4.5. Explain direct and portfolio investments in the financial accounts. Right? Right. So direct investments and portfolio investments. Right. So if you think about in terms of direct investments, so you want people to if you think of the difference between a direct investment is when somebody has like for example, they bought property in your country. So that's a direct investment. It's something which is close to them and they own it and it's in a foreign country, right? So that's a direct investment. So that's one example. Another example of a direct investment is when companies come and set up their plant in your country. So those are two things that you can explain when it comes to direct investments. Is either they invest in real estate, such as fixed property, or they obtain a meaningful share or control of the business, right? For example, USA's takeover of the local chain Massmart, okay? Where, I forgot the name now of the company that took over Massmart. Walmart, sorry. Yeah, where Walmart has taken over Massmart. Whereas your portfolio investments, these are things you are more familiar with. Portfolio investments is obviously where you just buy shares in a company, okay? And obviously with portfolio investments, they are not as fixed as a direct investment, because remember, portfolio investments, they are liquid and it can be pulled out at any time. So that's the basic difference between your portfolio and your direct investments. A portfolio investment is merely just buying a share in the company, whereas a direct investment is getting sort of the controlling shares of the country, right? Where you are in control of the company. And with that, it's a more fixed investment, whereas a portfolio investment, you can pull that out at any time, right? So there is more liquidity in a portfolio investment than there is in a direct investment. Right. 4.6. How does an improvement in the terms of trade influence the balance on the current account? Right, we just dealt with terms of trade in the section A bit, and we saw there, we just go back to that question very quickly. Right, terms of trade is where you're comparing your exports with your import prices, right? Just so that we have an idea what we are talking about here, and we are asking, how does this influence the balance on the current account? Okay, so what are we looking at here? We're looking at balance of payments, and we know, or you should know, your balance of payments is made up of 3 separate sub-accounts. There is your current account, your capital transfer account, and your financial account. And we just dealt with the financial account in the question before this, where we looked at the direct and portfolio investments, which would be form part of your financial account. Your capital transfer account is obviously where you're investing in fixed assets, and then there is the current account. Now the term current means day to day. So that's the biggest part of your balance of payments, because in there you record the day-to-day occurrences. And remember, balance of payments is about the transactions between two countries, right? So your balance of payments is nothing else than a record of transactions between one country with another country. So now we're looking at how does the terms of trade influence our current account. Okay, so if you think about it, when your imports are higher than your exports, it's not going to be a good thing for your current account. You want it the other way around, right? You want your exports to be higher than your imports, because that would have a positive effect on your current account. Okay, so if you think about it, your terms of trade deals with your import and export prices. So therefore, if there's an increase in export prices or a decrease in import prices, there will be a positive effect on the current account. Okay, so the reason we want this is that an improvement of exports compared to imports affects the current account positively. This can lead to a reduction in the deficit or an increase in the surplus on the current account. Okay? So, what can happen is that in the long run, we can see bigger sales volumes and also so we might see over the long term that there will be bigger sales volumes, but what can also happen is that you might also see a reduction in sales depending on the price elasticity of demand in foreign currencies. And when that happens, when we see a decrease in sales volumes, we can see less income being generated, which will obviously lead to a welfare loss. So if you look at it, you would rather see an increase in export prices instead of a decrease in export prices to have a positive influence on your current account balance. Now, 4.7, how will an increase in export prices and import prices affect the South African economy? Now, there are two things they're asking you here. They're asking you to explain how an increase is going to affect an increase in export prices and how an increase in import prices. So if you have a question like this, you need to understand that for an increase in export prices, the maximum marks you're going to get is 4 marks, and then an increase in import prices, the maximum there will be 4 marks as well. Okay? Right, we just saw from the earlier, the question before this, when there's an increase in export prices, it will show that there is the terms of trade is improving, and we will see more revenue being earned. Okay? Whereas an increase in import prices, that will result in the terms of trade deteriorating and obviously less money being earned, so there is decreased welfare. Okay. 4.8. Evaluate the effects of a currency depreciation in an economy. Right, once again, it doesn't ask to give positives or negatives, so you can give two of each, or you can give 4 positives or 4 negatives, or 3 positives, and it doesn't matter how you split it up, as long as you've got 4 points that you've discussed under within this question. Okay, so it can be positive and negative, only positive or only negative. It doesn't really matter. Right. The first thing you think about, if you think about the positives, it's always easy to think about the positives in this situation, because what happens when there is a decrease in your currency, automatically that means more people will be willing to buy from you because it's now cheaper for them to buy from you. We see an increase in tourists to the country because it's cheaper for them to travel to the country. Those kinds of things are the first things you think of. Okay. If you see here, it says brings an improvement in the balance trade through higher export sales, right? And also provides a competitive boost to an economy through increasing the value of profits and income for countries' business with investments overseas, right? So automatically, your earnings become much more because you are not having to spend what you're getting back from foreign companies is going to convert into much more in the end, right? Because let's say I'm earning dollars, earning in dividends in dollars, so when the currency depreciates, it's going to be more per dollar. So obviously now your income increases, right? And please note, you can speak about, you don't have to use these exact words, okay? Like you can just say that foreigners are going to be more encouraged to buy from you because of the reduced price or because of the currency depreciation, right? You don't have to use that exact words that is given in the memo, right? What are the negatives, right? The problem with the negatives is, so now, because your currency has depreciated, people don't have that confidence to invest in your country anymore. So obviously now governments lose out because it is harder for them to finance a budget deficit. And also because because the cost of imports are going to increase, eventually the price of the local products are also increase, okay? And it's also harder to now pay back any creditors that you have outside, right? Because now what you owe is it's now more, because instead of paying 14 rand to a dollar, I'm now having to pay 16 rand to a dollar. So in other words, where I used to pay you 32 rand a month, I'm now going to have to pay 40, if it's 30, 16, yeah, now you're paying 32 as opposed to 28 rand a month, for example, okay, if I'm paying you $2 per month. So once again, they could change this question and say, what are the positive effects of a currency depreciation or what are the negative effects? But if it just says evaluate the effects as openly as that, then you can look from either point of view, positive or negative. Okay. Right. Topic 5. I don't know if everybody managed to complete this section while they were at school prior to the lockdown, but let's see if we can gather some information from here, right? We're looking at free trade versus protectionism, right? Why would South Africa follow a policy of free trade? Okay, so what do you mean? What is meant by the term free trade? That means goods are available, are able to move freely across the borders, okay? So when you follow a policy of free trade, you're allowing specialization to happen. And when specialization occurs, this reduces the cost per unit of a product. Or in other words, a country is now able to make use of the economies of scale. Now, once again, if you remember microeconomics in grade 11, where we did economies and diseconomies of scale. So economies of scale only means that my outputs are far greater than my inputs. And that is why we say it's a reduced cost per unit, right? Because what you're putting in is much less than what you're getting out, okay? So that is what is caused as a result of specialization. Your sales can improve both locally and abroad, with resulting in larger profits being made. And also, there's a variety of goods available to consumers. Your economic growth can be accelerated, and this then promotes greater savings and investment. Because remember, investment is dependent on the savings. Right, allowing developing countries to take advantage of foreign expertise which may be unavailable domestically, promoting increased efficiencies, product improvement, and technological advancement. Remember, because of specialization, you are able to now concentrate and look at what are the ways or do the studies to see how you can improve the product, or using new technological advancements which you could have borrowed from outside, right? Promoting competition and improving resource allocation. Right, so these are the reasons why we should be considering a policy of free trade. Right, so why should free trade be favored over protectionism, right? So we've already seen now what free trade is about, and about specialization and how that makes you more competitive and all of that. But we need to now look at what is meant by protectionism now. Okay, so why should we look at free trade instead of protectionism? Right. With free trade, we said you can specialize and you can make better use of your resources. Okay, whereas with protectionism, now remember, protectionism is where you will not allow certain goods or services to come in from outside because you're trying to protect your own local industries. Okay, and sometimes it is it's very difficult for you to be able to produce that product or service at a lower cost than what you can get it from outside. Okay, and with free trade, you're opening up the market, and you are part of international markets, and you've got competition from outside. Whereas with protectionism, you do not want to export. You want to export. You do not want to import. So you encourage local businesses to make goods which you had previously imported, and that is what import substitution is about. Okay, where you encourage local businesses to make goods which were previously imported. So what are you doing is, so if you're not willing to buy from outsiders, it's going to make it very difficult for you to export goods again. Okay, because countries are going to say, you don't want to buy my goods, there's no need for me to be buying from you. Okay, with free trade, there's a variety of goods that are being made available to consumers, whereas with protectionism, you're not giving consumers that option to be to see what else is available, and also the problem with protectionism, then it can activate an inflation spiral because the cost involved in protection leads to more expensive locally produced goods. Right. Free trade assists businesses or enterprise finding better ways to improve their economies of scale, and also producing quality outputs. Whereas with protectionism, you have higher prices, and also with you don't have the lower costs. You have higher prices with protectionism because, remember, they're not necessarily producing the goods locally at the lowest possible cost, right? With free trade, you have access to technology from outside, and you have ways to get the most cost-effective manner possible to produce your goods and services, whereas with protectionism, we see job creation as well as economic growth being dampened, right? You can't grow your economy as effectively as you could with free trade. And South Africa has seen this happening because, remember, in the past, we were forced to produce everything locally because of the sanctions and that. And then when we became part of the global market, it was very difficult for a lot of our companies to withstand the competition from outside because they've been cut off for so long and protected for so long. So they couldn't compete with outsiders in terms of pricing and that. Right. Free trade contributes to the movement of people and goods between nations with ease, whereas in protectionism, there's a much more rigid approach, and it is difficult to identify infant industries that may be granted temporary protectionism, right? Meaning it's not going to be there forever, that at some point that will fall away. And also what we find, when these companies have been exposed to protectionism, they become dependent on that protectionism, and they cannot survive without that protectionism any longer. Okay, thank you, grade 12s. That brings us to the end of this session.